Okay, we're running just a few minutes behind on this trade. I wanted to try and catch this live. So this was we just wrapped up a coaching session, and then this trade was identified and discussed with coaching students. So they're in this trade now. First of all, the students that are in this trade, they can review this video to see how it worked, see why it worked. For those that are new, so they can watch this as a replay, and we'll break down the details here in just a moment. And then for those of you who are interested in this particular strategy, this is the HL30. I'll walk you through the details. So let's get started here. So the first candle, the question during the homework session was, there was a bearish candle right here. I'm going to get rid of this. Actually, I'm going to get rid of that, and then we'll put it back on there. And then I'll get rid of the tag. So let's get rid of both tags. We'll reset this whole thing. With the HL30, what I'm doing is basically trading off of the previous day's high or low. There are certain conditions, certain market environments, trading environments that would not be a good environment to use the HL30. And the reason is that the HL30 is very straightforward. It's just a 20 pip target, 20 pip stop. It's the same reversal candle patterns that I need or use with a Tech 1 trade. There are sometimes setups, HL30 setups, that I pass on because we use a 4-point trade filter, which means, and I teach all my coaching students how to use this, which means that if you see an HL30 like this, there are certain filters that you can use to determine if the conditions are optimum for the HL30 to even work out, if you should even be executing it. The question was, is this first candle, it looks like an engulfing candle at resistance, the previous day's high, was at the HL30? So let's review. Okay, so then we get a reversal candle. It looks good, but is it confirmed? So I have a check sheet, a checklist, worksheet. It's a checklist that you go down step by step. When you see an HL30, you just simply go down step by step to make sure that each one of these components to validate and confirm an HL30 are in place. If they're not, then you don't execute the trade. So the high CCI reading at that high candle from the previous day on the 30-minute chart is, you can see it over there on the left, the CCI window, the indicator window, it's reading 89.80. 89, a positive 89. On the close completed candle here, it was reading positive 127. So that means it was reading a higher, the CCI was giving a higher reading than the previous day's high CCI reading. And that's not correct. That's incorrect. That is a no-go. That means you got to wait. The CCI has to print a lower reading on the signal candle. The CCI has to print a lower reading than the previous day's high CCI reading. And in this case, it was not. Again, that first candle right there was plus or positive 127. That high from the previous day was positive 89. So it was a higher reading. That shows divergence. So that's not, we couldn't do it. But when we were talking about this and analyzing, I said we need to wait because it does this sometimes. It'll stay around this range and it'll go back up and retest one more time, which was perfect. And then it might print another bearish candle, which would be possibly another HL30 signal. And then if that one confirms with the CCI and it's printing a lower reading, then we've got our trade. So here is the second candle. Sometimes you just have to wait for it. If again, we know what the previous day's high CCI reading was. It was positive 89. On that candle right there, it printed a positive 62. That means it's printing a lower reading than the previous day's high CCI reading. And that's exactly what we want. So now step number 3 for confirmation is confirmed. We have a yes. At this point, we can trade it. So now that we have everything confirmed, and that's our candle, our entry is on the close of that candle. Not when price takes out the low or the high of the candle with the wick. It's on the close. So that close is at 92. Let me open this up. That close is at 92. That's our entry. We're using a 20 pip stop and a 20 pip target. So if we get in at 92, our first target is right down here at 72. The stop loss is a 20 pip stop loss. So we're putting it here at 12. Sorry about that. So 92 02, 12. 20 pip stop loss, 20 pip target. This can technically pay 60 pips. You could earn 60 pips on a trade like this. So what do I mean by that if this is the entry and that's the first target at 20? I don't like double counting. I really don't like saying that. The only time it would be something like that is when we're scaling out of a position. And I want you to show the potential, the actual earned profits as far as how far price is going. So I'll record it as a 40 pip trade, but technically you're earning 60. So sometimes you'll see trade services, other businesses out there, I guess I would refer to them as my competition. So some of them will execute a trade like this. Let's say that they get in at 92 and then they'll take profits here at 82. And it's a 10-point trade. Well, not including the spread, but let's just say it's a 10-point trade. And then they'll have 5 or 10 open mini lots or micro lots or something like that. So they'll say if they had 10 lots on the trade and they earned 10 pips, they'll say that they made 100 pips. And to me, that's pretty deceiving because price really only moved 10 pips. So when you're trying to analyze the structure of a trading system and how profitable it is, you're probably not going to execute 10 lots the way they do. And you may only want to execute 1 lot. So you want to try to figure out, is it really moving? Is this trading system really generating 100 pip profit from the entry to the final target, which is what we see here on the charts? Or are they inflating it by double counting because they execute 10 lots? You get my point. I don't like doing that. I really avoid doing that at all costs because I think it's really deceiving and it doesn't give you an idea of what the trading system is capable of. Again, if you're going to use, let's say, 1 standard lot and then you're following this company and they say that they made 100 pips, you're thinking, wow, this is great, I'm going to buy it. And then you get into a trade and they only give you a 10 pip target. Well, you're only making 10 pips no matter how you look at it if you're trading 1 lot, not 100 pips. So just keep that in mind. So again, 20 pips from the entry to the first target. Now, if the trend continues, and sometimes it can take a little while for this to actually happen, we then trade it to a second target for an additional 20 pips, which would bring us to 52. The way I recommend trading this and the way I do it is that, let me go ahead and open this up. I'll get in with 2 open positions. Now, some of you may be able to scale out, so you can close half of your position at the first target and then set the second open half of the position at a break-even stop so that you lock in the profits here when it hits the first target. But if it continues and it doesn't hit the break-even stop and it keeps dropping, then the second half of the position would close there at 52. So effectively from the entry to the final target, it's 40 pips, but because you've got 1 lot closing at the first 20 and the second lot closing at the second target for 40, it's the equivalent of 60 pips. So you're doing really well there if you're scaling out. Now, if you can't scale out, but you have to place 2 open orders. Let's say you're used to trading 1 mini lot at $1 a pip. If that's your max and you're not comfortable exceeding that, then I would recommend just using cutting that 1 mini lot in half and executing 2 positions. That way you don't go beyond what you're comfortable with. And you close the first lot at the first target. And once it's hit the first target, you then close the second lot. You then set the second lot. You move that stop loss up there at 12. You move it to a break-even stop. So it would be, if it's a 1-point spread, you'd close it out at 91. So right now, we're not changing anything. You wouldn't change anything as far as the stop loss to a break-even stop because it hasn't hit the first target yet. It may bounce around a little bit. It may take 4 hours for it to actually start moving back down here. Sometimes they move really quick. It depends on what's taking place during the Asian session. And then other times it'll just sort of linger around and it'll take some time. So I'm going to pause this, but we're going to keep doing updates on this. It has not hit the first target. Here's our stop. Here's our first target. There's our second target if we are able to scale out of this position. Okay, so we're live. It's been about maybe 20 minutes or so since I paused this, and it's about to hit the first target. So you'll notice that this is 9 minutes after 9 o'clock p.m. Eastern time. So this really isn't a bad time to trade for those of you that are in the United States on East Coast time. There's still a few more hours that you could potentially manage this trade. And this particular trade, I don't really like using this phrase, but it's as close to set it and forget it as I would ever want to go with a trade. I'm not, I just don't like doing the set it and forget it thing. You'll notice that this one stopped right there at 73. And if it looks like they're just going to stall at 73, I'll close out the trade. That's as close as I'm going to mess around with this one, because every once in a while, something like this will happen where it just goes a few pips. Maybe they widen the spread. They know I've got my 72 target in there. And then, it won't tag it. If I walked away from this, then it wouldn't close out the trade. Maybe it goes into, 72.9, 72.8, and then they widen the spread because they see my take profit level there, and then it bounces and pulls back up, and I end up with a loss. So that's one of the reasons why I really don't like turning away from the trades. But again, if you were trading something like this right now, it's 10 minutes after 9 p.m. Eastern time. And I think that's a really good time frame. I mean, that's not too late in the evening where you could find this trade, set it up, and get into it. But not all of them work out this way. Some of them take a little bit longer for them to actually hit their targets. They don't usually pay off like in 2 hours from the time we get a signal. And then again, there are other times when you get a signal right on the first 30-minute bar at the start of a new day. So here we've hit 72.9. My platform on another monitor here is closing out the first lot. So now we're at 71. Now we're setting the break-even stop here from 12 to 91. So I'm just going to set it right over here to the side. Sorry about that. So remember, this doesn't mean that it's been stopped out yet. We're just now hitting the first target. So now we're moving the break-even stop on the second open half of the position. So now if price from this point in time, if it turns around and goes back up to 91, the second half of the position would close at 0, but we still earn the 20 pips here from this initial trade. So right now we're waiting to see if price will eventually come down here to 52 if it continues to trend down in this direction. It's kind of a stretch if you look at the daily time frame, but it could happen. You can see yesterday's low. It's about halfway from where it is now to that low. So it's not too bad. It's not too far. It could definitely happen. One other thing to consider though is that this just might take another 4 or so hours. I mean, it could take 4 hours. It could take 6 hours. So at this point, now that it's hit the first target, now I would say that this could be a set it and forget it trade. If you have a second open position and you're hoping for 52, you've already locked in the target and the profits to 72 from 92. So you've already made money. There's no way you can lose money as long as you set the break-even stop now, the stop to a break-even stop now. So there's no way you can lose. Now you could go to sleep and forget about the trade and come back and check, because this is just like bonus money. This is just extra if it continues to move in that direction. So I'm going to pause this right now, and we'll see over the course of the next few hours. But this was a perfect opportunity. And sometimes I see them at this time, and I just, I'll execute the trade. And then again, at this point in time, now I can set it and walk away, and I'm comfortable because I know that no matter what happens, I'm still going to earn at least that 20 pips. Okay, this is an update as we continue to manage this position. This pullback right here went 8/10 of a pip, almost 1 pip away from that stop loss. So I have a stop loss set. It did not trigger here, so I'm still in the trade. But you can see here on the second half, it's still possible that it's likely to hold. If you look at some of the other pairs that I'm going to show you here in just a moment, it's probably going to continue a little bit lower. But right now at this point, I'm not really sure how this one is going to turn out. But as I mentioned just before I stopped talking, maybe, what was it, 6-7 hours ago, at this point we can consider this trade sort of like the set it and forget it, because we've already locked in the 20 pips. So let's review the others. This one's still in play for me. So we're looking at the euro dollar. So let's review the euro dollar. There's yesterday's low. This one's about to hit the first target here in just a few minutes. So I'll try to continue this one so that we can catch it live. So at that point we get in. Our entry is on the close, 1.0822, and price is hitting the first target right now. Our stop loss is a 20 pip stop, 20 pip target. So with an entry of 22, our stop would be down here 20 pips lower at 0.2, and we're not really having to worry about that at all. Now, we've put on at least 2 positions on this trade, or if you can scale out, if your broker allows you to do that, we've already locked in the first half of the profits here at 42. So we are up 20 pips at this point, and we have nothing to worry about. And now we can set it at that the break-even stop. So instead of leaving the stop down there at 2, we're now moving it to, the entry was 22, so we're putting it at 23. So if this continues further, we're going to track this today. I'm going to continue this recording. It is Friday, so we want to see how much the total maximum amount of profits on a day like this between these 3 currencies. We're going to take a look at the dollar Swiss as well. 42.62 is going to be the next. That would be the final target here if the trend's going to continue higher. And then I mentioned that there is another trade here. This is the pound dollar. So all of this is taking place on the same day. We've got the dollar yen started everything off here with the HL30. The euro dollar just hit the first target. And the pound dollar has already hit its first target. It's on its way to the second target. The close of that candle right there is 27. So you can see it didn't exceed the 10 pips to the downside. It stopped right there at that support, about a pip away. So let's go ahead and measure the low of the CCI from the previous day. It's minus 112. Minus 112 is the low CCI reading from the previous day's low. This close completed candle is minus 107. So again, we get in on the close of that completed candle. That's 27. That takes us to 47, which is the first target, and we're already here at the second target, 67. So we've scaled out. This one has paid 40 pips from the entry to the final target, but we earn technically 60 pips. If you've got 2 lots on the trade, you close the first one there at the first target, and then you set the stop at a break-even stop, and then if it continues, you earn an additional 20 pips for a total of 40 pips from the entry to the final target on that last second position, or the second open lot. So this one is paid approximately 60 pips total if you're in scaling out to both targets using 2 lots. Sorry about that. So there was one other pair here that I did want to point out. As all of this is going on, usually the dollar Swiss is going to move in the same way, just in the opposite direction. In the same way, meaning that it's going to give me the same setup here with the HL30. So let's review this one. This one's already hit the first target. We've got yesterday's high. Let me go ahead and open this up one click. So that's my entry. So here's my closed, completed engulfing candle. There's my confirmation with my indicators. That's step 3 of confirmation. I get in at 0.9713. The first target is 93. And the second target is 73. So this one's already paid 20 pips. This trade has already paid, this is a euro dollar, has already paid 20 pips. That's 40 pips so far. This pound dollar trade has paid to both targets. So we could call this another 40 pips because technically from the entry to the final target was 40. So that's 80 pips. But technically, this one paid us 60 pips because we're scaling out. And then we have 20 pips here on the dollar yen trade, which we initially set up our whole day. This is the first trade of the day. So we've got 100 pips so far. Again, 20 pips here on the dollar Swiss, 20 pips here on the euro dollar, 40 pips here on the pound dollar for 80, and then 20 pips here on the dollar yen. But again, you could tag on an additional 20 because we scaled out on this one on the pound dollar. So what I'm going to do is I'm going to go ahead and leave these here. We're going to pay attention to see how the price moves over the next 2 hours. It is currently 7:20, I should say, 7:20 New York time. So that way you can also get a pretty good idea of the amount of time it takes. So sometimes we're going to be in a trade like this one earlier in the day or after the rollover, the start of the new day, and then these the other setups here, because of the way the price structure moves, it may take a little while to actually get an entry. It could be, the London session. It's not uncommon for me to see price move around like this all through the Asian session on, let's say, a pair like this, all through the Asian session, through the New York session, London, and then the New York session creates some kind of opportunity with the reaction to news, and it'll move up towards the 10 pip range and then print a reversal, and then I can trade the HL30 during the New York session. And that's about it. That's because the rest of the time it'll just remain inside of a relatively tight range of consolidation for 2 sessions. It's always different, but it does work like that. So we've got 3 remaining open positions. The dollar Swiss, second target, dollar yen waiting for the second target, and the euro dollar waiting for the second target. So I'm going to pause this. We'll come back in a few hours as it's approaching the second targets on all of these. Okay, this is a final update on this one. So this is the euro dollar. It's just now hitting the second target. So this one is paid effectively 40 pips from the entry to the final target, but scaling out 2 different positions, 2 different lots. 20 pips to the first target, and from the entry to the second target is 40 pips. So effectively 60 pips. So let's take a look at 2 others. These are all open simultaneously. These are all running at the same time. We'll start off here with the dollar Swiss. The dollar Swiss just now about to hit, there it goes, 73. So I'm flat this pair at this point. I'm done. So again, this is the dollar yen. You remember when it hit its first target there. This retracement fell 0.8 of a pip away from stopping me out at the break-even stop. So I was still in this trade, and it has just now hit that second target here of 52. So I'm flat this pair. So again, this one effectively 60 pips, but from the entry to the final target here, 40 pips, scaling out at with 2 different lots. Again, effectively 60 pips. Euro dollar, we already pointed this one out, has already hit its second target. Dollar Swiss just hit its second target as we were talking. And then the final one here, the pound dollar. So all of these trades have hit their second targets. All of them. Effectively 60 pips on each one. 60 with 4, we're looking at 240 pips. If you were just trading one lot and scaling out at one location, which was the first target, then it's 20 pips on each one of these trades. 4 majors, trading just 4 majors. It is possible to trade the pound yen and the euro yen with this strategy. The stop loss and the take profits are different. I'll talk about that in another presentation, but thank you very much for those of you who executed this trade with me. Coaching students, you did a great job. Review this. Realizing that not every day we're going to get 4 HL30s like this. It doesn't happen every day. Again, it's the structure, staying true to the entry, the take profits, the stop loss. Honor that. Make sure that you stick with it. Again, here with this one, this is a good example. It really didn't go too much further than the second target. You can see support sitting right around here. At this point, I think that things might flatten out, probably bounce a little bit. At this point, I'm done. I'm flat all of these trades here that I've showed you this morning. So again, 240 pips possible if you're scaling out the way I mentioned. I think it's very important to scale out because very often you get opportunities just like this.